Hello and welcome to this HM Revenue and Customs webinar, Self-Employment and HMRC, What You Need to Know. During the webinar, we'll cover business types, how you tell HM Revenue and Customs that you've started in business, the classes of national insurance a self-employed person would pay, the importance of good record keeping, business outgoings, self-assessment online, and how you can budget for your first tax bill. If you're considering setting up in business, it's worth thinking carefully about which legal structure best suits your business, as it will affect things like the tax and national insurance you'll pay, the records and accounts you'll need to keep, who you have to notify that your business exists, and your financial liability if your business runs into trouble. The most popular legal structures for new businesses are sole trader, ordinary partnership, or private limited company, and each one has its advantages and disadvantages. You can find information on each of the different legal structures on the gov.uk website. In this webinar, we'll be covering sole traders' tax responsibilities, and not those of partners in limited liability partnerships or private limited companies. Once you've decided on how you want to set up your business, you'll need to let us know. You can do this by registering online for business taxes. You'll be asked for information about yourself and your business. Tax records will be set up for you using the information you've provided. As well as registering for HMRC business taxes, you'll need to arrange to pay Class 2 national insurance straight away. I'll be covering the classes of national insurance paid by someone who is self-employed later on in the webinar. A self-assessment online account will automatically be set up for you at this stage, unless you say that you don't want one. Once you've registered your business with us, we'll send you a unique taxpayer reference number, or UTR, in the post. It's a unique 10-digit number that identifies you to HMRC, and you should quote it in all future communication with us. Having a unique taxpayer reference number is not confirmation that you're self-employed. You could be registering for self-assessment because you're letting out a property for the first time and have rental income to tell us about, or perhaps you're the director of a company. A partnership, as well as the individual partners, will have its own UTR. Your UTR will be shown on a notice to complete a tax return, your self-assessment tax return, and on your statement of account. If you can't find your UTR on any correspondence from HMRC, you should call the Self-Assessment Helpline. For confidentiality and security, the person you speak to won't be able to give you your UTR over the phone, but you will receive confirmation of the number in writing. When you register as self-employed with HMRC, a record will be set up for both self-assessment and for Class 2 national insurance. There are 4 main classes of national insurance. Class 1, which is paid by someone who is employed. Class 2 and Class 4, which are paid by someone who is self-employed. And Class 3, which is voluntary and paid by someone who hasn't paid enough national insurance in another class. If you're self-employed but also work for an employer, then you may have to pay Class 1, 2 and Class 4 national insurance. Let's take a look at the classes of national insurance that you'll pay as a self-employed person, Class 2 and Class 4. Class 2 national insurance contributions are payable at a flat weekly rate, and they count towards your entitlement to some benefits. You can either pay these monthly or 6-monthly by direct debit, or in response to requests we issue in October and April. Payments for your Class 2 national insurance contributions become due on the 31st of July and the 31st of January, the same time as your self-assessment tax bill. We'll look at this a little bit later. If you expect the income from your business to be low, then you can apply for a Certificate of Small Earnings Exception and not pay Class 2 national insurance contributions. However, you might decide to carry on paying them voluntarily to keep your entitlement to the state pension and other benefits. The second class of national insurance you may be liable to pay is Class 4. The amount of Class 4 national insurance due will be based on your profits for the tax year. If you send your return online, the amount you need to pay will be calculated automatically for you. Class 4 national insurance contributions are calculated and payable at the same time as your income tax. Unlike Class 2 contributions, Class 4 national insurance contributions don't count towards state benefits. You can find information on how to register your business with HMRC and self-employed national insurance on the gov.uk website. Let's now have a look at one of the most important areas of running your new business: record keeping. It's important when starting a new business that you get a proper record-keeping system in place and keep it up to date regularly. You'll need to keep records of all money coming in and going out of your business. This will include details of all cash, cheque and credit card transactions. For most businesses, a cash book and a petty cash book will be enough to record this information, but the exact records you need to keep will depend on the size and nature of your business. You might like to take a look at two new schemes: cash basis and simplified expenses. They were introduced in April to make it easier for small businesses to calculate their income tax. There's a short video and a recorded webinar on our YouTube channel, and you can also sign up for a live webinar session. If you use an item both for business and private use, such as your car, you'll need to keep sufficient records to be able to work out how much you use the item for business use and how much it's used privately. How you keep your records is up to you. You can use a computer-based system or paper, whichever you find easier, as long as it's accurate and up to date. You'll need to be able to show HMRC, if asked, how you arrived at the information you put on your self-assessment tax return. Once you've completed your tax return, how long do you need to keep your records? Well, you should keep your records for at least 6 years after the tax return deadline of the 31st of January. That's to be on the safe side. If your business records are lost or destroyed and you can't replace them, you should let us know what's happened, and you'll need to recreate them as best you can. To help you run your record-keeping system like clockwork, think tick. Set aside a regular time to update your system. How often will depend on your business. However, a little and often is better than a lot of time spent infrequently. Setting some time aside each week is a good idea. It's important not to mix up your business finances with your personal ones. Treat your business like an entirely different person to you, and keep the finances of the business and you separate. Control over your business finances is important to the success of your business. The fewer people involved in managing it, the less room for mistakes or other problems. Consider password protecting important computer files. Business records need to be kept for a minimum of 6 years. You should back up computer records regularly and store paper copies safely. As well as helping you run your business more efficiently, having a good record-keeping system in place will help you to complete your self-assessment tax return. You're likely to spend money on different things in the course of running your business. What you spend it on affects whether and how you get tax relief for it. Your outgoings normally fall into one of 3 categories: business, capital, and private. Business expenditure refers to the ongoing costs associated with running your business. These are sometimes referred to as day-to-day running costs, such as stock, or if you're a manufacturing business, raw materials, business premises costs, motoring costs, advertising, general admin, and employee costs. Capital expenditure is the money you spend on buying, creating, or improving a business asset that you use in your business. A sole trader or partnership can claim tax allowances called capital allowances against profits on some, but not all, types of capital expenditure. Things like motor vehicles, equipment, tools, or computers. And private expenditure is the money that you spend for your own private use and is not an allowable business expense. It's important that you separate your private expenditure from your business and capital expenditure. Things like private mileage, the cost of goods or materials bought for private use, payments made for non-business work, drawings, and Class 2 and 4 national insurance. I'm now going to introduce you to some expenses and allowances that are common to most businesses. First, capital allowances. Capital allowances give you tax relief for the loss in value of certain capital assets you buy for business use. A capital asset is an item you may use for a number of years, for example a van, or equipment, or perhaps a computer. Claiming capital allowances will allow you to set the cost of an asset against the profits of your business. When you buy a capital asset, you should keep a note of what you bought, when you bought it, and how much it cost, as you'll need this information to calculate any capital allowances due. You should also keep detailed records of business and private use if you intend to use the asset both for business and privately, as you'll only be able to claim for business use. There are special rules for assets or equipment that you received as a gift or already owned and used before you started your business. It's likely that you'll use either a car or van in the day-to-day running of your business. You can claim a deduction for the business use of the vehicle, and there are two ways of working out how to do this. The mileage rate method. If you choose this method, you'll calculate your motoring costs using a fixed amount per mile travelled on business. You won't be able to claim any other motoring expenses, other than interest on any loan used to buy the vehicle. You don't need to be the owner of the vehicle, but you must be the one responsible for paying the running and maintenance costs. The other way to calculate your motoring costs is to use what's known as the actual cost method. You can claim for the actual running costs of the vehicle, which should be worked out using detailed records of business and private mileage. This ensures that you're only claiming for the business use of the vehicle. As well as claiming the actual running costs of the vehicle, you'll also be able to claim capital allowances for the cost of buying the vehicle. If you use the actual cost method, then you need to keep records of all your motoring costs, for example, receipts for fuel, repairs and servicing. It's important to know that once you've chosen to use either the mileage rate method or the actual cost method, you must continue with this until you change your vehicle. If you own or rent a business premises, then you can deduct the costs of maintaining it. For example, money spent on rent, heat, lighting, repairs and insurance. If you work from home or use part of your home as an office, then you can claim for the business percentage of the costs of running your home, such as heating and lighting. Every business spends money on day-to-day administration, which can include things like advertising, stationery, postage, and telephone and fax. You may also be able to deduct the cost of trade or professional journals or subscriptions. Broadly speaking, you can claim for money you've spent for the sole purpose of making business profits. But you can't claim for any money that you've spent for non-business purposes, such as your own personal expenses or drawings. You can find information on allowances and reliefs if you're self-employed on the gov.uk website. I mentioned earlier that keeping good records will help you run your business more efficiently and also help you to complete your self-assessment tax return. But when will you get your first self-assessment tax return? Well, in April, following the date you started your business, you'll receive a notice to complete a tax return. You can choose to do your self-assessment tax return online or in paper form. If you decide to complete a paper tax return, then you'll need to contact us and ask for one to be sent to you. And at the beginning of the webinar, I mentioned that when you register with HMRC Business Taxes, you'll also be enrolled for the associated online service. If you register with us as a sole trader or a nominated partner using our tax registration service, you'll also be enrolled for self-assessment online. But what are the benefits of completing and sending your self-assessment tax return to HMRC online? Well, it's safe and secure. Also, the online return can be personalised, so you only complete the pages you need to. You can complete part of your return, save it, and then come back to finish it later. You'll know instantly that your return has been received by HMRC. You'll get an automatic calculation showing how much you owe and when it has to be paid. Online returns are dealt with quicker as well. The date by which we must receive your completed tax return is later, and if you've paid too much tax during the year, you'll receive your repayment sooner. When you've completed and sent your tax return, you'll want to know how much you need to pay and when. If you complete your tax return online, you'll be able to view a full calculation of your income tax and Class 4 national insurance liability. The calculation will also tell you when the amount you owe is due and payable. If you complete a paper tax return, then we'll send you your tax calculation once we've processed the return. As a rule, you'll have to pay your first tax bill by the 31st of January following the April you were sent a tax return, or received a letter from us telling you to complete and send a return. If you don't pay the tax you owe by the 31st of January, you may have a penalty that's based on the amount of tax due. You may also have to pay interest on the late payment and on any penalties, so it's important to pay us as soon as you can. It could be a while before you have to pay your first self-employed tax bill, so it's important to start budgeting when you start to receive income from your business. But how do you know how much to set aside? We've produced an interactive Ready Reckoner. You won't know exactly how much income tax and Class 4 national insurance are due until you've completed your tax return, but the Ready Reckoner will give you a good idea. You can find the Ready Reckoner on our website. Lots of businesses also use our budget payment plan, as it makes paying your self-assessment tax bill easier. It's voluntary, flexible, and allows you to make regular payments. You're able to decide the regular, weekly or monthly amount you want us to collect. You can change the regular payment amount. You can take a break and suspend payment for a period of up to 6 months. And you can cancel the plan at any time. So, the best way that you can ensure you're prepared for your first tax bill is to use our Ready Reckoner to see how much money you need to set aside, and then pay that amount over to HMRC using the budget payment plan. If you need further help, you can sign up to receive regular emails from HMRC. The emails highlight the help and support we provide for small businesses. We have an online learning package for newly self-employed customers, which includes practical case studies. You can work through the package at home and at your own pace. gov.uk is the best place for government services and information. Visit the website for plain and simple help and guidance. You'll find lots of bite-sized tax information videos on our YouTube channel. If you need reassurance, quick help, or are just interested in finding out more about a subject, then this may be the option for you. And you can also follow us on Twitter to receive official news and information. That brings us to the end of the webinar, but there are a couple of points I'd like to leave you with. Think carefully about which legal structure would suit your business, as it will affect things like the tax and national insurance you'll pay and the records and accounts you'll need to keep. Let HMRC know that you've started in business by using our tax registration service. And remember, keeping good records will not only help you to run your business more efficiently, it will also make completing your self-assessment tax return at the end of the tax year much easier. Did you know that you can now use a record-keeping app to record your income and outgoings on the go? Why not give it a try? It could save you time and help you keep your records up to date. And finally, ensure that you're in the best position to budget for your first tax bill to make sure that it doesn't come as a surprise. If you'd like further information on business expenses, you can sign up for our Business Expenses and Capital Allowances webinars. There are also 2 mini-webinars on national insurance for the self-employed and my first self-employed tax bill. So, what are you going to do next? For example, set up a record-keeping system? Budget for your tax bill? Here are some ideas to get you started.